Welcome to the latest Motley Fool scoreboard. I'm on in Chocolate Balloon. We've got longtime fools, Lou Whiteman and Toby Bordelon, giving a 1 to 10 rating to student loan processor, among other things. Nelnet, ticker symbol NNI. First, we'll talk about the strength of Nelnet's business, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Toby's at a 7. Lou's got an 8.5. We'll start with Toby, and then we'll build up to Lou's score.
Yeah, what would you call this business? Financial services company, right? Playing in everybody's favorite industry, lending. They do loan servicing is a lot of what they do, as you noted, and with a focus on student loans. The business is solid. They are one of the biggest players in that student loan servicing industry. The market should keep growing, right? Because college isn't going to get cheaper anytime soon, and all those deferrals we had post-COVID are coming to an end. Falling interest rates may be a bit of a tailwind here too, but I do have some concerns over the political and regulatory risk. Very possible more regulation is coming in this industry. Not necessarily a bad thing for Nelnet. More regulation often means a bigger moat for the companies who can adapt and are the best in their industry in terms of following the rules and getting their business organized. But it is a level of uncertainty that knocks it down a bit for me. So that's why we got 7.
Yeah, I went 8.5. I was actually thinking like doing 8.464 because, a convoluted business deserves a convoluted score, right, guys? And this is just a weird collection of businesses, student loans to fiber communications, all right? But the common thread, what this business really does is it takes piles of money and makes them bigger. It is a cash generation machine. The student loans at the center of it, Jim Gillies likes to call that student loan portfolio just a huge melting iceberg of cash that they can put to use other ways. And their special sauce, what they do, whether it's lending, software, tech, is they capital allocate in ways that makes more money. Anyone with a kid in private school knows fax management. Anyone who does high school athletics knows about huddle. All of these things. Simply put, this is a company that is very good at taking money, growing it over time. And really, isn't that the point of business? So yeah, I'm a big fan.
I mean, it sounds like what Boston Omaha actually wants to be, not quite Berkshire. Nelnet.
Yeah. Yeah.
Management. A 10 is Warren Buffett. Speaking of, 1 is Homer Simpson. Both of you have 9s. What's the case here, Lou?
So this is very much a bet the jockey play. Basically, you're investing in their ability to find promising areas to invest. And at the risk of being bombastic here, guys, and knowing full well where the Oracle of Omaha is based, Nelnet's Michael Dunlop and Jeffrey Nordhook, they might be the best capital allocators in the state of Nebraska. Okay,
Whoa.
Too far? Yeah.
Blasphemy.
Heresy.
Blasphemy.
Yeah, and maybe a bit too far, but not by a notch. This is oddly named, oddly configured set of business, but they work really well together at making money. And for that, we credit the architects and we give them a 9.
Yeah, look, I went 9 here too. These guys are pretty good. I got to say, I ding them a point for having a totally separate investor relations website instead of that making it part of the main corporate site. I mean, what is going on there? But yeah, I'll still go 9 here. Capital allocation skills, as you noted, Lou, are top notch. It's still a founder-led business. Michael Dunlop is serving as the chair of the board still. He and CEO clearly know what they're doing. They've done a great job of establishing and maintaining a solid company culture, too. I like to see that.
Future episodes will have a 10 being the Nelnet folks and a 1 Homer Simpson. There you go.
There you go.
Financials. A 10 is a fortress. A 1 is yikes. Toby's at a 6.5. Lou's got a 7. Go ahead, Lou.
So the first thing that everybody, when they find out about Nelnet, does, they look at the balance sheet and see this massive non-proportional debt load. 10 billion or so in debt last time I checked. Ignore it. All right. Most of that is the federally guaranteed student loans, this business that is slowly dying and slowly just melting off. But the point is federally guaranteed. So it's just not a factor you have to worry about. Strip that away. You have a solidly profitable little company. You'll see they adjust a lot because of all their investments. It's going to make a lot of volatility in earnings, but it works. There's a paltry dividend. What you're buying is sort of management's ability to invest cash in new opportunities, so they're not going to give you an oversized return. But they have repurchased like 20% of their shares outstanding in the past decade, in part because the market doesn't understand this business and they barely traded book. I'll ding them for complexity. It takes a lot of work to follow this company and all its moving parts, but there's a lot to like here.
Yeah, I went with the 6.5, given that Lou opened us up to half point scores here up at the top. The balance sheet does look good for what they are. Cash flow is very good, up a decent amount this year. You love to see that, right? My problem, and maybe this is picking too much, but revenue has been slowing. Now, there's an obvious reason that your interest income is down, right, year over year, because interest rates are coming down. That's fine. No issue with that in principle. But net interest income is also down this most recent quarter. A little bit concerned over that. I feel like you should be able to keep your spreads up no matter what interest rates are doing. That's probably a function, at least partially, of the transition to lower rates. I'm sure that's what's going on. Borrowing's not exactly matching up the lendings, but I never like to see that still. So that's one thing I looked at. I said, I'm not quite sure about that. Probably a temporary issue, but it's a metric I'd watch.
I do not like to see good numbers go down. Bad,
That's right.
bad. All right. Well, let's see how you put this into context for the next 5 years. Lou, we'll start with you. How well will Nelnet stock do over the next 5 years? How safe is it? A 10 is a sure thing. A 1 is a lottery ticket.
So I'm a believer here. I mean, look, this stock is up a solid 20% plus this year, and it's still barely trading above book value, gentlemen. And look, I think that book value is very conservative. I mean, if you look at what they value Nelnet on, I mean, there's a world when Nelnet ends up being almost half the market cap of this thing. And so book value is conservative. They're just at books. I may be a little naive here, because maybe this business is just too obscure, too complicated, too many moving parts, and it won't ever take off. But I trust management. I like the set of assets, 15% plus. For safety, I'll ding them on the complexity. I'll ding them on this being a bet the jockey play, so you're trusting in humans. There is risk reward, so only a 6, but I really like what this business can do from here.
Yeah, just 10 to 15% for me. I'm a little less optimistic. I think we're going to see some solid growth, but not massive growth. And part of that is, look, if you want those large growth numbers, you're going to have to get a lot more shareholders excited about the stock. And I'm just not sure we're going to see that. Safety 6. I am concerned about regulatory pressures. That's a big reason that safety score isn't higher for me.
Top it time. Lou, is there a company in Nelnet space that you like better?
I dare you to tell me what Nelnet space is. So this is really hard. I don't think there is. You mentioned Boston Omaha, and Boston Omaha, kind of, with all respect, Nelnet is what Boston Omaha hopes to be when they grow up. So I can't recommend that. Maybe Berkshire, but again, I think Nelnet actually could be a better growth story from here.
Yeah, same for me. It's hard to say something definite because they are kind of unique, really. But look, if you want a company that does loan servicing in a different industry, I'll suggest Walker and Dunlop to you. They operate in the commercial real estate market, focusing on multifamily housing, offering loan origination, loan servicing, broker services, advisory services, that sort of stuff. Very different industry, to be sure, but similar to Nelnet in that they're kind of a niche player in what they're focused on.
Thank you to both Toby and to Lou. They've given Nelnet a strong overall score of 7.7 out of 10. It's one I keep meaning to look into, and the takeaway for me is, given the complexity of the company, taking the time to really understand it could be a really interesting thing to be doing, because others, like me, I'll keep procrastinating because it's like, I can look into an easier stock. Look out for a new scoreboard every market day at 7 p.m. Eastern. Not sure what's up next, but I'm sure it's good. Till then, Fool on.
Well, no, yeah, whatever. No, nobody knows what Nelnet does. That's the beauty of the company.
Yeah.
Shock
Blasphemy.
jock.